The S&P 500 was up 0.58%, closing at 6738.44. We're back up into this resistance zone between 6730 and 6750. Of course, a breakout of this zone would mean new all-time highs for the market in general. Gamma exposure continues to be skewed positively to the upside at 6700 and above. Our next immediate target is the 6750 strike, followed by the 6800 strike. And so as we've entered into this new monthly OPEX cycle, it's been a pretty good sign for bulls that we've been able to hold the lows down here at 65.50 and back up near the upper end of the trading range. Zooming out a little further on our chart and scrolling up the options chain, we can see gamma exposure continues growing at the 7,000 strike. Every single day we have additional volume coming in, adding to the open interest at that 7,000 strike. And so that's ultimately our year-end target, as we've basically been in a larger consolidation zone for the better part of the past month. And we think a breakout to the upside has a high probability chance of occurring in the next week or two. We are bumping up against our upper dealer cluster zone. This is an area where dealers can potentially increase their selling pressure as price trades into this zone. So this could be a little bit of a slow grind higher up towards that 6,800 strike. We're thinking over the next couple of weeks we could eventually reach that 6,800 strike. So we're not expecting a major breakout, partially because we're seeing that added selling pressure from dealers at these levels. Turning next to our gamma exposure data graph, total gamma exposure is back into the positive zone. This, of course, means that we're in a buy the dip environment. You can see implied volatility is certainly a lot higher than it was just a couple of weeks ago. Implied volatility higher than 49.8% of the time in the past year. And so although we are in a buy the dip environment, because volatility is a little bit higher than we have been previously over the last 6 months, we do need to give a little bit more room to these dips when they do occur.
Thanks, Anthony. I wanted us to look at IWM again today because it had the largest break to the negative yesterday. So we really want to take a look at what IWM looks like since QQQ and SPX are looking more bullish at this point. IWM may give us some clues as to whether or not this move higher is a fake out or if IWM is about to catch up and head toward higher targets. So I have the daily chart pulled up and you can see we closed just below the whole moving average, which is at 246.42. After failing to get above the whole, we did see slight improvement in GEX. So we really don't have a lot of clear indication right now whether IWM is about to gap up and move beyond this line toward the big GEX cluster at 250, or if we're going to reject and head toward this 240 area and potentially lower. So it seems like a decision is very close by, though. Sometimes when we see stocks or ETFs at key decision points, sometimes it's better to wait for the decision to be made and then react fairly quickly. So we'll be keeping an eye on this in coming days. We still see some volume down toward the 230 area, not as dramatic as it has been in recent days, though. So wait and see with IWM, but we do have a general uptrend that has been maintained despite some choppiness over the last couple of weeks.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF. We've been talking a lot about this lately. GLD reaching a euphoric crescendo before kind of having a little bit of a mini crash over the last few trading sessions, but seemingly finding its footing here just below the 370 level, trading today at 378.79. The largest gamma exposure is still at the 380 strike and the 395 strike. And just a quick update on our GLD weekly income strategy for those of you guys who have been following along. Today we actually locked in $5,640 profit on our short October 24th GLD 375 puts. We rolled those out to Monday's expiration and rolled up to the 380 strike. We are maintaining our long November 21st 375 puts. So a net on our short and long, we're net about $1,000. We're down $4,600 on our long puts, up $5,640 on our short puts. So we rolled those out to Monday's expiration, and with the potential to collect another $3.60. We sold 10 of those, so that'd be another potential $3,600 if price stays around this 380 level. This strategy has been really great over the last 6 months. We're averaging about $1,000 a week. And by the way, if you guys are interested in following along as we trade this strategy, as well as a number of our other strategies, you can become a member at Geeks of Finance geeksoffinance.com. I'll put a link in the description below for you guys to check that out. Coming back here to our current chart on GLD, a couple of things really stood out to me in the options market today that I just wanted to highlight to you guys. One is the amount of volume at the 395 and the 405 strike. This was over 200,000 contracts at each of those strikes, and those are far out of the money strikes from where we're trading now, trading just below 380. So this is telling me that there are market participants speculating for much higher prices in GLD in the coming weeks and months. And so this could be a potential near-term bottom, and we could potentially see a further rally. The gamma exposure is also supporting that, as I went over earlier. We're kind of seeing gamma exposure die off, basically below that 370 level. Not much gamma exposure down here at these strikes. The skew in the GEX data is basically pointing to higher prices as well. Again, this could take a number of weeks or maybe even a month or two to play out, but we do think we'll be back near this 400 level or higher near the end of the year.
Yeah, thanks for bringing that up, Anthony. The VIX and gold both moving down together recently, with the VIX down again today, almost 7%, well below the 18 mark. In fact, pretty close to 17. And now that we're through VIX expiration Wednesday, we've seen some negative GEX pop up again at lower strikes. 15 and 16 are present. The largest GEX cluster is at 17 currently, and we had a lot of volume between 16 and the 18 area. What we're really wanting to watch this week is this trend of the VIX staying above the weekly whole moving average. You can see that today we closed just below it at 1730. So volatility bulls are going to want to see the VIX recover back above this yellow line at 1765 to indicate that there's a chance for another VIX spike entering next week. That would maintain this uptrend that we've seen since August and give a shot at these strikes ranging from 20 to 25. We can look at the 2-hour chart and you can see the VIX is almost down to this lower Keltner channel again, but we don't yet see the indicators below the VIX yet. So for a turn to happen, we would want to see the whole moving average below the VIX to indicate that turn is possible to go back up. So the overall trend is definitely shifted in favor of market bulls, but we still want to pay attention to areas where the VIX might reverse and also that weekly candle that we just looked at.
Next, I just want to circle back to Tesla. We discussed Tesla in last night's video. Following the after hours earnings release, Tesla was selling off in after hours, but made a pretty nice rebound today, up 2.28%, closing at 448.98. And let's just zoom in a little further here. We'll take a look at the 15-minute chart just to get a better glimpse of this gamma exposure data. We mentioned yesterday in the video, gamma exposure was mostly concentrated at 450 and 500, with basically a floor of support around the 400 strike. So any kind of dip down towards that 400 level actually looked like a good buying opportunity. We entered a position in Tesla today on the bounce off of the lower dealer cluster zone, basically down a little bit below the 420 level. And so even though the daily change was only 2.28%, the actual change from the lows this morning was actually much greater, already approaching this big 450 gamma exposure concentration. And of course, looking here where our upper dealer cluster zone is, there's a lot of resistance there. However, gamma exposure and volume still coming in pretty big at that 500 strike. So we think that once buyers churn through all the selling that is taking place around that 450 zone, this could actually become a big breakout for Tesla. May take a couple of weeks to play out, but this is looking like a pretty good setup for a move into this 500 level by year end.
Let's take a look at the setup on coin, which has been under pressure, as we've also seen Bitcoin and other cryptocurrencies under pressure. But we have an interesting GEX picture here with 300 on the downside, lots of positive and negative GEX at 300, and positive GEX at the 400 strike, also matching the daily upper Keltner channel. And most of the volume has also been between this range. So we have a situation where, to me, it looks like coin may be close to a turning point. Coin does have earnings coming up in the next couple of weeks, so we do want to be aware of that. We sometimes prefer to avoid trading names that are approaching earnings season, given that earnings does introduce new uncertainties outside of the GEX picture and other factors that we're considering. But the GEX picture may come into play whether before or even during earnings. And so we wanted to highlight the current picture.
And guys, for a limited time, we are running a special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining, but this promotion is ending soon. So definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and ideas. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.